This is your world at 10. Now, Wall Street's down over 3%, but there's one stock that's shining despite this downturn, and that's the stock of Sun Microsystems. It's up over 36% today because it's found a new suitor in Oracle. Oracle's made a bid to buy Sun Micro at $9.50 a share. That's 10 cents more than what IBM had offered to pay. So will Oracle turn out to be the savior that Sun was looking for? CNBC's Jim Goldman joins me now from our Silicon Valley studios. Jim, thanks very much. We've been speaking every week now on Sun Microsystems. Did this come as a surprise to you, Sun and Oracle, considering that till last week we were talking Sun, IBM, and even then we knew that Sun had done the rounds with all other suitors and finally settled on IBM as the best one. So does this come as a surprise to you?
Yeah, you know, it does come as a pretty big surprise. I was talking to folks as late as last week at Oracle who told me there was simply no way that Oracle was interested in doing any deal with Sun, mostly because Oracle, quote, doesn't know how to build anything, unquote. And that is a reference, of course, to Sun's business in hardware. Oracle, of course, is the world's second largest software maker. But apparently when the talks with IBM finally broke down completely, Sun's bankers contacted Oracle late last Thursday with a proposal. Oracle quickly looked at the deal, said, geez, you know, maybe this Java and Solaris and MySQL database software would make sense in our family of database software products. Let's figure out if we can do a deal. And these two were able to seal this thing up with board approval from both companies in under 48 hours. And that just goes to show you what these companies are capable of when they really want to get a deal going. And this is a pretty substantial one.
All right, Jim, you know, what swung this deal for Oracle? Was it the antitrust issues that IBM had in acquiring Sun, and you had told us a couple of weeks ago that that would pose a real problem for that deal? Or was it price? Because I also remember you making a comment that the Sun board was split down the middle with Scott McNealy, the founder of the company, sort of against, you know, the CEO on the issue of price. Now, even though Oracle is offering only 10 cents more than IBM, which one of these issues was it that swung the deal in favor of Oracle?
Yeah, and I think it does come down to price just a little bit, but it also comes down to the idea of what kind of deal was truly realistic. IBM expressed some serious reservations about those antitrust concerns that you alluded to. The broader issue for Oracle and Sun, there simply are no antitrust issues that we can see, at least as outsiders looking in, and apparently the folks at Oracle came to the same conclusion. As far as Sun is concerned, they looked at the chances, the realistic chances of getting a deal done. With IBM, there were a lot of outlying issues, and the price wasn't so very good, considering there was no real certainty that the deal would close. With Oracle, you get a little bit more money, just a dime a share, so really insignificant, but you get the absolute certainty that a deal, in fact, would get closed. And, you know, at $9.50 a share, that's a 42% premium over Sun's closing price on Friday. So this is not an insignificant premium to Sun shareholders who just wanted to see a deal done. Sun's top investors just wanted to see a deal done. And while IBM was originally offering more money and then ultimately less, the big outlying question, the big concern was you'd go through all of this process, and at the very end of it, federal regulators either in this country or in Europe would unravel the deal. So Sun went with the bird in the hand, did the deal with Oracle, and it seems to make sense for all sides.
All right, so if they wanted a deal done, they got a deal done. Who makes for a better partner for Sun, Jim? Is it Oracle or is it IBM?
I think, you know, Oracle does make for a better partner if you start to put the emphasis on software, and that's really what Sun is offering to a company like Oracle. Oracle becomes now a completely vertically integrated software provider for its 320,000 customers around the world. The hardware side of Sun's business, that will continue under the Oracle umbrella. That should be interesting because Oracle really has no history in actually working with and owning a hardware company. But and that really probably would have been the emphasis on the IBM side. So you're just dealing with another side of the coin here as far as what Oracle gets from a Sun Microsystems acquisition. I think Oracle provides Sun with incredible distribution. I think Oracle offers Sun the kind of longevity, the kind of certainty in the marketplace as far as Java, MySQL software, as well as Solaris that IBM simply couldn't offer. And I think Oracle makes a much better fit at this point. And quite frankly, Oracle says it just wasn't interested in Sun at the prices that were being thrown around, $10, $11 a share, wanted to sit on the sidelines, see where the IBM deal would end up, and not essentially have to bid against IBM. And when it was very clear that IBM was pulling away from the table and Oracle could swoop in at a price that was attractive to it decided to do the deal. I think Oracle makes a lot of sense. Could have worked very nicely with IBM, but again, with all those uncertainties about where this deal would ultimately go and whether it would face antitrust concerns, I think that Sun is making a very good choice here, and Oracle is getting a very good deal.
All right, Jim, what does this mean for more M&A in the tech space? And also, considering that Sun was going to bring so much strength to IBM in the server and the data center market, is IBM now going to be on the hunt for another target?
It's a really good question, and I'll tell you, every time that Oracle has done a deal like this, and my goodness, there have been so many. You've got BEA and PeopleSoft and Siebel. Oracle has done something like 50 or 60 of these acquisitions over the past 10 years, so it has always been on that trail, and every time it goes into a major acquisition, it always seems to launch a new chapter of M&A in the software business. So your question is right on the money. Who might be next, and is IBM still interested in acquiring somebody? I think the answer has to be yes. IBM has to strengthen its database business, it's got to strengthen its software business for enterprise, and it's got to strengthen its server business. So it can't do that alone, it can't do that organically, it's going to have to go out and buy somebody. And pretty much everybody that I'm talking to this morning seems to think that a software database company called NetApp is likely going to be in IBM sights if it's not already. NetApp is a smaller company, about a $5 billion market cap, so IBM could come in and essentially offer to buy NetApp for around the same price it was talking about with Sun, and NetApp offers the company a lot more opportunity as far as profitability is concerned. Stock's up about 40% since March 9th, so IBM is coming into this company, if it's interested in buying it, at not an inexpensive price premium, but nonetheless it seems to make a lot of sense. It's getting a lot of activity, a lot of attention this morning. Lower a little bit today, but watch that company. That might be one that is in IBM sights or certainly somebody else's site. And then you got to look at Red Hat. I mean, people are looking at the Linux side of things. Oracle buying Sun is a Unix kind of deal, so that makes sense on that side of the equation. But you look at a company like Red Hat, you look at a company like that offers the Linux opportunities that IBM has been looking for, and that could also be a company in play.
All right, Jim, busy day ahead for you. Thanks very much. Jim Goldman there joining us from our Silicon Valley Bureau. Well, there you saw it. IBM down about 0.5%, Oracle down 2%, and Sun up almost 36%. That's a big day for the technology industry. Well, time for a quick break on Your World at 10.